What's going on, traders? Welcome to the channel. My name's John. That's Groot. Sometimes trades don't work out, you know. We trade options here. All right, so we are talking Roblox. What happens when a options trade goes against you? Can you save a losing options trade? And in this case, we had set up a put credit spread. Basically, it's a bullish play that the stock goes higher. And that was when we were trading, a few weeks back up here in the like 90s to high 80s level. The 85 strike has been breached, and right now it's an up day. Personally, I have kind of a more bearish bias on the market overall, like some weakness potentially. This could go against me, but let's see. We'll show you how to set up a trade to adjust to this. There's multiple ways as well to better explain that, but it's better that we maybe dive in and I'll show you on Tastyworks what my trade is, what the setup is, and how it's looking, and what to kind of expect here. So as I'm in this trade right now, you're going to see it's Roblox, and it is right here. The in the money short strike is the 85 strike here. The 80 strike is my put purchase. So I sold a strike here at the 85, bought a strike at the 80, and this is what actually pushes the price higher as a bullish play because I'm net short. I received a credit from the broker of a total of $154. Right now though, I am negative 75, you're seeing here. So the bigger question is, one, what gives? We're still above our break-even point, and yet you're in the negative. Well, what's happening is there's still time left on this trade. There's 23 days left in this trade, and so realistically, I probably could wait this out, but I think it's a great way to play this since I have a bearish, somewhat bearish bias. I'm neutral to bearish, I'd say. So I'm gonna actually set up a neutral trade in this. Now, a couple things you could do if you are nervous or you're losing money, but the total since it's a 5 point wide spread, you go 80 minus 85, so that's like 5, right? You go 500 minus 154. That would actually tell me what my total loss would be if I let this ride out. It'd be $346 total. And right now I'm only 75 into that. So the question is, do I want that to happen or not? And really, that's the beauty in options. You can kind of play around with whatever you'd like. And I guess I'll do that here today because I'm going to mess around with what we've got. So puts on the right, calls are on the left. What I can do to adjust this is there's two things. I could also add another credit spread, and I don't necessarily know a put credit spread. I'm sorry, I should clarify that. Now I could be like, hey, let me do, I don't know, let me go lower to like the 20, 21, 20 delta. So I'll go like 76, and then I buy at the 71 strike. So I literally just took a credit spread and moved lower, and I'm basically making a bet again, very bullish at that point, that we don't go below these strike prices, and I'd pocket this total premium, the $89. Now, the good and bad is like you kind of start to stack your risk. You can see here max loss 411, tack that on to the 300. So if the market turns bearish, this could go against you really fast. So that's where it can get a little tricky. It's like, hey, what's your bias? And the other thing you can always do, you can always just exit the trade or let it ride. When you let it ride, you almost have a stop loss in the trade anyways because you're playing with a spread. So you don't really have to like set up any type of stop losses. Your risk is defined in this trade. This is what I'm going to do. I'm going to actually do it as a neutral trade. So I'm going to take the bearish side of the bet. When I combine it with my existing position, it becomes a neutral trade. Anyone who's familiar with this, you could also consider it like an iron condor or an iron butterfly, but really don't let the mumbo jumbo get in your head. If you're not, if you're kind of new to this, it's not as hard as it sounds. All the lingo can get tricky, but literally what I'm doing is I'm just doing, instead of a put credit spread, which is bullish, I'm now going to do a call credit spread, which is bearish. Okay, so, and then as you pair those together, it creates almost like a neutral setup strategy. So what I'll do, let me just show you an iron butterfly. What that is you would set up a short strike at the exact same short strike as your put side. So you can see here, I just hit the bid right here, and that put me as a sold call at the 85 strike. And since I went 5 points wide on the previous, from 85 to 80, I'm going to go 5 points wide here too, 90. Let me do this if it lets me move down. And what you can see here is that gives me a much higher credit setup at 187, which is great. That's pretty awesome, but some downside risk now is that the stock is now trading exactly where we're at in terms of this curve. So in this iron butterfly, the stock is right here. I'm basically saying, hey, by this time in 23 days from now, the stock is going to stay exactly at this point, right? That's kind of a weird way to put it. And, you know, do you really think it'll sit in one spot for a whole month? Everyone's got different opinions. My opinion is no, personally. So I don't like this bet because I have to pin it right here in this exact spot. Now, what I could do is I can adjust this differently and I can set up my strike price a bit further away from the original. So how about I go actually to the 90 and then 95. So I'm still 5 points wide, as you can see, but I'm also 5 points away from the original strike price that I had, the 85 strike. And look at this, I'm still collecting a pretty good amount of premium. Instead of 185 or whatever it was, 181, it is 119, which is not bad. So it's $119. And look at my profit tent, it changed. Instead of me having to pin it in this little tiny spot that was like right here, it actually expanded. So I do give it some room to run. I would take on more premium, and then I would also end up, you know, being okay if the stock goes down. I'm sort of covering my bases. And there's even better adjustments you can make after this. Let's say in a week, the stock goes lower and lower. Well, I can start adding another trade. I can close this existing trade and start moving lower and then collect more income, move lower and collect more of the income and premium, and then just keep moving lower with it. And then what's funny is if you do it enough times, or if you roll out for farther enough in time and all this stuff, you can actually collect more income than the spread itself and actually just become profitable. So it is really nice. That's one of the benefits with options. It just really requires patience, discipline, and risk management. And the market ironically closed while I was doing this, so I can't set up this trade, and I'm a little bummed because it was on an up day. Usually I like doing stuff like that when the stocks are up. So Roblox is up about $2.50 today. We'll see how tomorrow goes, but I hope that is helpful. Let me know what questions you got. Check out this next one that explains the credit spread setups in AMT and how to make income on trades like that.